Well, look, I hear a lot of worries and concerns about the Chinese economy, which is understandable. The Chinese economy has been going through a rather challenging period. Consumption is weak, unemployment is up, and growth has slowed significantly. Okay, so there's a lot of talk about that, and certainly within China too. But in China, of course, people understand more about what's happening on the ground, and which is these phenomena needs to be put in a larger context. And the context is the Chinese economy, which is the largest in the world, or second largest based on how you count, is going through a very significant and fundamental structural shift. It's the first time such structural shift has happened in the last maybe 1 or 2 generations. Okay, so what's happening is the locomotives of the Chinese economy for the past 20, 30, maybe even longer years, the main locomotives, real estate, which accounts for 1/4 to 1/3 of our GDP, low-end manufacturing, and the recent 2 decades, consumer internet platforms, these had run out of steam. And some of them had been creating troubles. Real estate, for instance, huge bubble. Okay, so if they had continued on that path, the longer term, I think the economy will be trapped in what's called middle income trap. Okay, so they had to do a course correction. And it's just not any kind of normal course correction, but a very fundamental one, to shift the economy towards new growth model. And what we're experiencing now is the short-term pain, very intense, the short-term and maybe even some will last to medium-term pain of that transition. But the transition is nevertheless necessary for the long term.
Is that transition, which is partly about producing higher tech goods, higher value goods, and then selling them to the rest of the world, as well as to Chinese consumers, is that creating inevitable tensions that are going to lead to more geopolitical and economic friction with the West?
It's possible. Western countries, especially the United States, may feel threatened. Well, competition threatens sometimes. But I think we need to manage the relationship so the competition is healthy, that makes everybody better instead of drive everybody down.
But is that, I'm sorry to interrupt
Yes.
you, but I'm speaking to someone who knows more about this than I ever do, and that's Richard Koo from the Muir Institute. Brilliant voice on what happened in Japan. And he's saying a lot of those lessons actually can be translated to China. He said the advantage of China is they can see what's happened, they can see the problems. But if there is such inequality in trade, i.e. such a large surplus from China and such a huge deficit in the US, that's not good for anyone, he was arguing.
Yeah, well, I mean, the trade surplus is correct. I mean, the Chinese manufacturing is growing from strength to strength. I mean, it's now, I think that the industrial manufacturing sector is bigger than the top 10 countries combined. China's industrial capacity is the biggest in the world, bigger than the US, Germany, Japan, and India put together. But, I think the US and the Western countries need to feel that they still have a lot to compete on. The value add of China's industrial capacity is still relatively low. Right. So a lot of those profits are flowing to higher value add industries, which are in the U.S., in Europe. China's trying to move up the value chain. That's part of the transition, but as they should.